I spent way too long overcomplicating trading. I added more rules, more hesitation, more setups, and I was still losing money. I got to a point of getting sick and tired of getting sick and tired, bro. And then 2 years ago, something clicked when I finally stripped everything back to pure price action. I built a proper system and I haven't looked back since. This video is the technical side of how I trade. No indicators, no nonsense, just a setup I use every single day. I'm walking you through the whole thing systematically, entry to exit, exactly how I think in real time. Let's get into it. The first thing you need to understand is simple market structure. You need to be able to identify whether price goes up or down. You do not want price to go sideways, aka a consolidation. This is where the strategy does not work. Price has to either move up or down. The next thing you need to understand is fair value gaps. That might sound very foreign to you, but trust me, it is very, very simple. You can basically use it as support and resistance. You can see price going higher, lower, higher, lower, higher, lower. Simple market structure. Fair value gaps open up when price displaces to one side and then comes back to tap the fair value gap and use it as support to go higher. Now the same thing goes for the downtrend. Fair value gaps open up when price is displacing down and price pulls back to it, using it as resistance. And here's a chart example so you can see and understand better what a fair value gap actually is. You can see the same structure in price going up, down, and up into the fair value gap. A fair value gap opens when the highest point of the previous candle is not overlapping with the lowest point of the candle after. The candle in between needs to make space between the lowest point of the candle in front of it and the highest point from the candle before it. And this is obviously opposite for a bearish example. This is a bullish example. So price goes up, down, and up and uses the fair value gap as support. That is the most important part. It uses the fair value gap as support to continue simple market structure. The next and last thing you need to know is the fractality of price. What is fractality also might sound foreign to you. That means that every single thing that happens on the higher time frames also happens on the lower time frames. Meaning, if you have structure like this happens on the daily time frame. If you zoom in and you go to the 4-hour, it happens on the 4-hour as well. It happens on the 15-minute and it happens on the 1-minute. It happens on every single time frame. Price just repeats simple structure on every time frame. And this you can use to your advantage because the higher time frame is more powerful than the lower time frame. This is how you can easily find direction for the day in price. Say the 4-hour is going up and down, just like the first example. And you have a fair value gap opening up here on the 4-hour, new fair value gap. So what do you think price is going to do next? It goes down back into the fair value gap, and you know there is structure. So when it comes here, what do you expect price to do? Go higher again. So when you look at the 4-hour and see that price is at this point, and you expect price to do this and go up from this 4-hour fair value gap that we just talked about, using it as support, you can zoom in to the lower time frame to look for your entry. It is really, really simple. This can happen on the 4-hour. This could be the 4-hour and the 5-minute. This could be the 1-hour and the 5-minute. It could be the 15-minute and then a 1-minute entry. You can mix every time frame, but this is a cheat code. These correlations in time frame, these work the best. 4-hour, 15-minute, 1-hour and 5-minute, and 15-minute and 1-minute. These is the ones that I use the most. It doesn't have to be strictly these, but these work the best together with higher time frame fair value gaps and lower time frame entries. So please keep that in mind. So now let's get into the actual way that I trade. I'll give you an example of a setup that I take and a setup that I look for every single day in the market. It is very, very simple. So here you can see on this side here, you have the bullish structure that I was talking to you about in the beginning. This is simple bullish price structure on a 15-minute time frame. Here, a 15-minute fair value gap opens up. So when price comes down here, what do we expect to happen? What has happened here? Up. What has happened here? Up. So what do you think is going to happen here? Up. That is what you expect. That is what you predict the market to do. You expect price to go up from here. So what did we learn? Time frame correlation. This is the 15-minute time frame. So if you start to zoom in on the 1-minute time frame, it is this small price structure. This move down is this move down on the 15-minute. As I told you, price is fractal. What it will do on the higher time frame, it will also do on the lower time frame. So when you drop down to the 1 minute time frame here, you come down to the 15 minute. And as predetermined earlier, you expect price to go higher from here. So the only thing that you need to look for here is confirmation. You need confirmation and validation for you to take a trade in that direction. Because you never know, it might fail. You cannot just enter here. Because what if price blasts through to the downside? You lose a trade. So you wait for validation. Price enters the 50-minute fair value gap right here. And you wait for price to build some structure and then invalidates the fair value gap. It invalidates this fair value gap on the 1 minute because once again, price is fractal. So you create fair value gaps here for price to go down. What you want price to do is react of the higher time frame fair value gap, which is the 15 minute, as again, higher time frame is superior over the lower time frame. And once we react of that, you wait for a 1 minute confirmation. The confirmation is invalidating this fair value gap. Now, what happens when you invalidate a fair value gap? You get a shift in structure. Instead of going down again and using this fair value gap to go down, we break the fair value gap, close above it, and use it as support. That is what the whole strategy is based around. Instead of continuing the downtrend, you wait for price to go higher than this fair value gap, close above it, invalidating it, and then using it as support. Well, if we invalidate the fair value gap, what does it become then? It becomes an inversion fair value gap, which is an IFVG, inversion fair value gap. So instead of using it as support, we disrespected it, inversed it, and used it now as support instead of resistance. So using it to the downside, straight, every fair value gap created is used as resistance and to hold price down and keep going down. So once we get this fair value gap on the 1 minute and we are reacting off of the higher time frame, which is stronger, we then go up and invalidate this fair value gap, which then turns into an inversion fair value gap. Only once we have the inversion fair value gap here, only then do we enter. So if you get the inversion and we get the close above, you put your stop under the low and you target liquidity. This is the simple reversal. You wait for price to come into a higher time frame fair value gap. You wait for confirmation, which is the inversion fair value gap, and you take a buy. You reverse in the higher time frame fair value gap. This is the point of interest. This is your area that you want to look at and see price react from, and then create your confirmation and then just take the entry. Really, really simple. Now let's hop into some real chart examples. Here's a quick chart example of a 50-minute fair value gap. Just the same example as I just explained. We have a fair value gap here. We tap back into the fair value gap and we go lower. So basic structure, once again, to the downside. This is a bearish example. So we have this 50-minute fair value gap here. So we zoom in to the entry time frame, which is the 1 minute. And we wait until we tap the fair value gap, which happens here. And as soon as we tap the fair value gap, we wait for price to inverse a fair value gap on the 1 minute. Once again, you have 1 minute structure here, like this. And all we need to do is wait for price to invalidate the bullish structure, which is closing below the fair value gap here, making it an inversion, taking an entry as soon as we close, and continuing lower. Because the higher time frame is doing this. Lower trend. While the higher time frame is making a lower trend, you always follow the higher time frame. You wait for the lower time frame to shift down. After tapping the 15-minute fair value gap, you get this as a confirmation. This is the exact entry on this candle close. And then you simply put your stop loss at the high, put your target at the low, which is liquidity. This is your target. And you wait for price to go there because it should be able to go there due to the higher time frame being in a downtrend. Remember? Down, up, down on the 15-minute. Even though it's short-term uptrend on the 1 minute, you wait for it to inverse the gap and go down again because price is fractal. This is just a simple example, including a liquidity sweep. Once again, making it a better setup and higher probability of hitting as well. Again, you should understand liquidity. If you don't, check out my video on liquidity. Let's get into a live trading example where I execute this in real time. I will be looking to enter.
Order filled.
And of course, as soon as we hit the low there, stop loss is going to break even, because clearly NAS is also hitting it way faster than ES is going to. So we have a SMT plus intermediate term low swept. Okay. Stop loss to break even. And we have a SMT at the lows right now. I could take partials here, but I'm just holding full. Rami and my TP.
Order filled.
Let's go. Up 1K for the day. 1100-ish. Great trade. Walked you guys through it from beginning to end. We basically got straight into profit and went to the sell side. 70 points caught and TP schmacketh. So the average RR of the setup that I take every single day is around a 1-to-1. Sometimes a 1-to-1.2, 1-to-1.5, but average it is around 1-to-1 RR. Win rate is about 78%, and you get around 2 to 3 setups per week on average. Could be 5 in a week and then 1 the next week, but average 2 to 3 setups in a week. So you're here, you're making nothing, you're unprofitable still, you have bad risk management, you're struggling to pass challenges, you keep blowing them, even though you think you're finally gonna pass this one, you keep blowing the fucking challenge. You're revenge trading and you have a lot of mental blocks. This is a very important part. If you implement the strategy, all these things fall away. Why? Because you have a proven system. Risk management is really just something you need to follow based on a strategy. Simple 1-to-1 target. Nothing more, nothing less. Don't change anything about it. You're struggling to pass challenges. With this systematic approach and just executing whenever your setup says so, you will pass challenges, period, end of story. Also, revenge trading and all the psychological issues that you were experiencing about, oh, should I take the trade or not? And then you miss the trade and it goes without you. Then you go in late and then you lose and then you revenge trade and you spiral, you blow the account. All of that is gone because you won't hesitate to enter. You know when to enter. You know when to enter is when you get the inversion fair value gap as validation, and you simply take the trade and you put your stop above the high, target liquidity, and you're golden. You're not going to win every trade, obviously not. It's not a perfect strategy, but you're going to win more often than not. And with this RR and this win rate, you are simply profitable if you follow the method exactly. That being said, if you implement the strategy, let's see how you can actually get to 10K a month. Simply buy 5 50K accounts. Don't care where it is, whatever platform you want. Pass them, and once you're funded, simply risk 500 per trade. With this win rate, it is highly unlikely you're going to lose 4 times in a row. The max loss limit on nearly all firms is 2,000, so you can lose 4 trades and you blow the account. So risk 500 per trade, 5 accounts. That means if you're copy trading, it is 2,500 euros, $2,500 per trade that you risk. You have realistically 10 setups in a month. 2 to 3 a week. It's either going to be 8 or 12 a month. So I went in between and gave you 10 setups in a month. With this win rate, 2 losses, minus 5K. To break even, let's be realistic. You're going to hit break even trade sometimes. And then you have 6 wins. If you get this 15K minus 5K, you end up with 10K in profit. And you'll be like, oh, profit split, this, that. But if you go to Top Step, you keep 100% of your first 10K at Top Step. So your first payout up to 10K, you keep 100% of that. I'm not affiliated, not promoting Top Step. I'm just saying it is a pretty good program, has been around for years and years on end. And you keep 100% of your first 10K across all your accounts. This is how you can get to 10K a month, by simply implementing this strategy, following it to a T. Don't interfere. Don't let your mental blocks interfere. And you will pass challenges and you will get to 10K a month eventually. I'm not saying you need to copy trade 5 50K accounts immediately. Maybe start with 1. Have a 2K month. It's also fun. You have a 2K payout. At least you get to the payout. At least you're getting somewhere. You can finally start winning and start printing money. Because it has taken way too long. And you know that. And don't just take my word for it. Start backtesting it yourself on FX Replay and see for yourself. If you want to know more or learn more about the strategy, subscribe to the YouTube, follow me on Instagram, add me on Discord if you got any questions. This is my Discord, Swerve Trades. You can add me, ask any questions. I will try to answer them as soon as possible. And I'll see you guys in the next one. Peace out.